Hey everyone, George here. So if you're a contractor and you don't understand the difference between cash and accrual accounting, you might be paying taxes on money you haven't even received yet. Or worse, missing deductions you should be taking. Today I'm going to break down in plain English with contractor examples so you know which method you're using, why it matters, and how the IRS looks at it. So let's get started. So if you're new to the channel, welcome. We talk all things accounting for contractors here. So accounting is really just about timing. When does income count? When does an expense count? There are two main accounting methods, the cash method and the accrual method. The difference is when income and expenses hit your tax return, not if, but when. For most contractors, the method you use determines when you pay tax, when you deduct expenses, and whether you pay tax on unpaid invoices. So let's talk about cash method accounting. What exactly does cash method accounting entail? So cash method is simple. You report income when you get paid, and you deduct expenses when you pay them. Doesn't matter if it's check, ACH, credit card, or Zelle. The IRS considers it all cash. So let's take a contractor example. Let's say you're a GC. You finish a job in December and invoice $40,000, but the customer doesn't pay you until January. So the cash method result, the income is reported in January, not December. That means you don't pay tax on the money until the following year. So let's take another contractor example with an expense. Now let's say you buy $12,000 of materials using your business credit card on December 28th. So again, the cash method result is that you deduct that $12,000 expense in December, even if the credit card isn't paid off until January. So here's where contractors get tripped up. If money is available to you, cleared, and ready to deposit, technically speaking, it would count to you as income in that period, even if it's not actually deposited yet. So if a client hands you a check on December 30th, but you don't cash it until January, technically speaking, the IRS would consider that as December income. So here's another big perk or big thing that you should know with respect to all this, and that's prepaying expenses, and this is a huge year-end strategy. Cash method contractors can legally prepay certain expenses. So for example, January rent paid in December, insurance, rent, office expenses, you can prepay up to 12 months and take a deduction in that period. So we talked about cash method accounting, let's talk about accrual method accounting. Accrual accounting ignores when money moves. It cares about when income is earned and when expenses are incurred. So here, income is reported when the work is done, the invoice is issued, and the right to payment exists. Expenses are deducted when the obligation is fixed or the work or delivery occurred. So let's take a contractor example for accrual method accounting income. You're a framing contractor and you complete framing in November. You invoice $80,000 and the client doesn't pay you until February. So under the accrual method result, the income is reported in November, even though cash came in later. And yes, you can owe taxes on money you haven't even received yet. So let's take an expense example under the accrual method. Let's say your attorney bills you $3,000 in December for contract review, and you don't pay the bill until January. Under the accrual method, the expense is actually deducted in December, even though you haven't paid it yet. And under the accrual method, there's something called the all events test that the IRS uses. That basically means that everything required for payment has happened and the amount is determinable. So once those conditions are true, income and expenses are locked in. So the accrual method can definitely get a little trickier, but with the right expertise, there is more room for tax strategizing. But if you want to keep things simple, definitely cash method is the much simpler method. So most contractors can use a cash method if you're a service-based contractor, or if you have inventory but your average annual gross receipts are under 30 million. So pretty much most small and mid-sized construction businesses qualify for cash. So who are contractors who must use accrual basis? Either somehow they're involved with manufacturing, contractors with significant inventory, larger companies, and certain long-term contract situations. So what is also very common in construction is using hybrid accounting. So a lot of contractors use the cash method for labor, subcontractors, and overhead, and accrual for inventory, materials, and cost of goods sold. This is not an uncommon setup. But once you pick your method, you're supposed to stick with it. You could change the method. You have to file a Form 3115. The IRS approval is often automatic, but mistakes here can cause double income, loss deductions, and IRS notices. So usually this isn't something you would do lightly. If your business significantly changes, like moving from services to inventory, it might make sense, or if there's big change in how your contracts are being handled, they're becoming more long-term. But otherwise, you generally would stick with whatever method you started with. So final takeaways, and these are all kind of tax planning or strategies. Big mistakes I've seen contractors make are paying taxes on unpaid invoices, missing year-end deductions, mixing methods incorrectly, or switching methods without the proper approval or documentation. So cash versus accrual accounting, it's not just boring accounting, it's tax strategy. You have to think of it like that. The wrong method can cost you a lot of money, tens of thousands. The right method can legally defer taxes and improve cash flow. So I hope you found this helpful. If you have any questions, any of this applies to you, our calendar link is down in the show notes. Feel free to book a time, we can speak. And if you're curious on how a lot of this bookkeeping works, I have an episode that I'll be putting up right here.